Hey guys, welcome back to Firestarter Investing. I want to help you understand your investments and make informed decisions. Today we're going to be talking about Palantir, ticker symbol PLTR. We'll talk about who Palantir is, what they offer, their capital structure, and I'll give my final thoughts and valuation. I'll start with the bottom line of my opinions, but none of this is financial advice of any kind. TLDR, I like the company, I like the stock. I can see the stock price hitting $25 in 5 years, which is not a good return, in my opinion, and $100 in 10 years, which I think is a really good rate of return. Palantir is a data analytics SaaS company. They did a direct public offering back in September 2020, so about a year ago. Their value proposition is basically to enable companies to improve their operations by utilizing their data. An interesting fact is that Palantir got its name from the Lord of the Rings trilogy, where a Palantir is an indestructible orb that can be used to communicate with faraway people and see past and future events in other places. That's a very fitting name for this company, given what they do. Palantir was founded in 2003 by Peter Thiel, Alex Karp, Joe Lonsdale, Stephen Cohen, and Nathan Gettins. From what I can tell, Joe and Nathan have since left Palantir. Alex Karp has remained as a CEO and board member. Peter has been chairman of the board since the beginning, and Stephen is president and secretary, and a member of the board. Alex was a Stanford Law graduate, where Peter Thiel was his classmate and roommate. He grew up in Pennsylvania to a Jewish father and African-American mother. Primarily because of his mother, he seeks to combat discrimination. He considers himself a socialist and progressive warrior, but doesn't appear to let one party's politics drive his decisions for the company, taking a holistic view instead. In early interviews, Alex was adamant about adding checks and balances in the product around data access to ensure the public's trust in what data the government was looking at.
Everybody who knows me personally like you knows that I've been a card-carrying progressive my whole life. My family is progressive. I have a degree in what amounts to progressive thought. Obviously, there are many things I would do differently, and I've never stopped being critical of this administration. I'm not planning to vote for this administration. So there are things I do differently. The core issue, though, is who decides. And to the people who want to reduce the complexity, it's commonly known that our software is used in operational contexts at war. Do you really think the warfighter is going to trust a software company that pulls the plug because something becomes controversial with their life? Currently, when you're a warfighter, your life depends on your software. They will never trust you if you pull the plug just because you're unpopular.
Peter holds a BA in philosophy from Stanford University and a JD from Stanford Law School. He co-founded PayPal in 1998 and served as CEO, president, and chairman of its board of directors from 2000 until its acquisition by eBay in 2002. He was an early investor in Facebook, now known as Meta, and currently serves on its board of directors. I didn't find much info about Stephen. From what I did find, he helped create the initial prototype of Palantir in 8 weeks. He holds a BS in computer science from Stanford University and has served in various positions in Palantir, most recently as the president and secretary, and as a member of the board of directors since 2005. Palantir has 3 platforms that enable the products they offer to clients.
And we built out PG, which is our government product, and our Foundry product, and built a way to maintain them so that we wouldn't have to scale the number of people.
Gotham was built specifically for government use cases. It was constructed for analysts at defense and intelligence agencies. It enables users to identify patterns hidden in datasets and facilitates handoff between analysts and operational users. It's also offered to commercial customers, mainly those in the financial services industry in connection with fraud investigations. I wouldn't read all of the features here, and there are probably more at this point, but these features were tailored towards government and intelligence use cases, and I don't think they will scale well to other industries. Foundry was built for commercial use cases. It was designed to be scalable and general enough to work for multiple industries. It makes it easier for commercial companies to manage and interact with their data. It was built as a cloud-native SaaS platform, and most new customers now opt for the SaaS platform. I believe most of Palantir's offerings sit on top of Foundry and just make it easier for companies to immediately utilize the data that they have. This is where I expect the bulk of Palantir's growth to come from.
And what you see in the COVID pandemic crisis is we had built this way of going to market with Foundry, which would allow us to literally supply an enterprise with a completely new stack of products within 6 hours and maintain them. And what you saw when we did that is we grew the company 49%. 49% off of a 743 base. And the divergence between expenses and growth is dramatic.
Apollo was created to simplify management across multiple platforms and make it easier for Palantir's development team to write and deploy code. It's a continuous delivery system that runs as its standalone platform and is the layer that sits between the applications and the underlying infrastructure. It runs nearly everywhere Palantir software is deployed, meaning on the cloud, on-premises, and unclassified networks, and orchestrates updates across the deployment targets. It manages and deploys both Gotham and Foundry now, delivering incremental automatic updates for the fleet over 41,000 times a week. Palantir is also planning on commercializing Apollo. Palantir currently generates revenue in 3 ways. The Palantir Cloud subscription that lets customers access the software in Palantir's hosted environment. The on-premises software license that lets customers run the software in their own hosted environments. And then professional services support contracts. In their S1 filing, Palantir estimated their total addressable market was $119 billion, comprised of $26 billion from the US government, $37 billion from international governments, and $56 billion from commercial companies, though they limited the commercial market to 6,000 companies with more than $500 million in annual revenue. With the introduction of Foundry for builders, it's clear they intend to move down market. The revenue from startups will barely be a drop in the bucket. A few potential risks for Palantir. Government will always be a significant chunk of revenue. More on that later. Concentrated voting power. Palantir has 3 classes of shares, one of which is basically designed to give Alex Karp, Peter Thiel, and Stephen Cohen majority voting rights for life. Class A shares have 1 vote, Class B shares have 10 votes, Class F shares have variable number of votes, but give founders control of just shy of 50% of voting power. Founders need to retain a minimum ownership threshold, right now of 100 million shares, for this to kick in. And finally, reputational harm, meaning the use of AI in certain use cases. Revenue has grown about 44% year over year so far. Palantir has $2.3 billion in cash, while total liabilities are only $976 million, so the company is financially very healthy. They could cover all of their liabilities with just the current liquid cash. Since we're at the end of the quarter, I don't want to go too in-depth on my valuation. I may put a video out once Q4 results are released and I can update my model. To summarize, I assume average revenue growth of 40% over the next 5 years, and then slowly decreasing to 25% by year 10. Even though I expect the commercial side to grow faster than the government side, even after 10 years, I still expect the government to be the source of 40+% of the revenue. Because of the stock compensation, I unfortunately anticipate outstanding share count to increase 50% over the next 5 years and 70% over the next 10 years. Combining DCF, price to share, and PE valuations, I get a $77 billion 5-year market cap target and a $346 billion 10-year market cap target. Factoring in the 50% share dilution over the next 5 years, that means the share price would be about $25, or a 6% compound annual growth rate. With 70% share dilution over 10 years, the share price would be about $100 per share, or an 18% compound annual growth rate. Without share dilution, I see a 15% and 25% compound annual growth rate, respectively. Obviously, there will be share dilution, so I'm just putting this here for reference. Before looking closely at what Palantir offers, it was hard for me to understand their value proposition and how they could grow well. After taking a deeper dive, I like this company, the management, and the competitive advantage, and see a very good future for it. Based on my valuations, I think it's risky holding it for 5 years or less, but definitely worth holding it for 10 years or more. What do you guys think of Palantir? Let me know if there's something I missed in my research or analysis. I'm planning on doing deep dives on more companies, so stay tuned for those videos. Until next time.